Guys, what are you thinking about these like interest rates?
The Fed's going to raise them. It's a 64% chance or bet that they're going up in December.
You seeing that as well too?
Yeah, absolutely. And when you look at interest rates having been down, at a historic low for such a prolonged period of time, it was only meant to provide some economic easing and help ease up the housing market, the housing crisis. They've been at a prolonged low, and I think mostly out of irrational fear from the administration that we were going to have deflation versus inflation, which happened during the Reagan years. And for banks being able to sit on a ton of cash and not lend, that's kind of the scenario that we've ended up in now. So.
Yeah, it's crazy how Wednesday after the election, the T-note went from 1.7 to 2.1. The Treasury bond.
Yeah.
I pay attention to that every morning.
Yeah.
I'll get it on my cell phone. I'll put my little app on, and I'll see. Oh my God, it's 2.11. I usually add 1.7 to it. I know where the rates are going to be. It's not an exact science because everything affects interest rates. But when I saw that, I'm like, oh God, why didn't she let me lock yesterday? A lot of these people are floating because it's been going up the last 3 weeks.
So they should lock into
They should have locked in, but hopefully it levels off in the next couple of days. It's strange how a Tuesday and a Wednesday, usually it gets a little better.
I can relate to what you're saying because there's times I'll tell customers, you need to move your money now. And they go, all right, well, let me think about it. And then it takes them a couple of days to get back to me, and something happens that was relatively predictable.
Yeah.
And it's the same thing when your mortgage advisor is saying you need to lock now and to that paralyzing moment of fear, and procrastination has costly consequences to it.
Well, let me ask you something. So as a financial planner, what happens if rates stay, let's just say if rates just stayed low, they're artificially low. What happens if rates stay artificially low for a more prolonged?
Well, a couple of things. First of all, it's difficult to make money in the stock market because it is cyclical, and we've actually had more down years than we've had successful up years. Your gains are made on 6 trading days in the calendar year in the stock market. Which 6 days those are, we don't know. We can reasonably predict with certain things, but we don't have a crystal ball. So if you can't make money on your cash in the bank and you can't make money in the stock market, and yet you're retired and you need to count on $20,000 or $30,000 a year out of your IRA, now you're in a dilemma. And it doesn't matter that you can go borrow money from a bank. Most people don't create debt to feed themselves income. That's
so
not
rates
the way
going
to do
up
it.
That's a good thing.
Rates going up
for
is
savers,
a
for
good thing.
savers,
For refinancing,
it's not obviously.
And I heard something along the lines like 70% of 1 second, Mike. 70% of Americans don't have savings. Or is it more
they
than
do
that?
not, yeah. And I mean, for too long, Americans have been about 2 paychecks from living in their car.
That's crazy.
And
That's
when
sad.
it was, and that was more of immediately following the housing crisis. But still, we have a lot of people that are working very, very hard at low-paying jobs, trying to make ends
Check
meet.
to check.
And the banks are very, very difficult to borrow from. And so, all things going up are good for business. Interest rates going up are good.
Yeah. Well, I we don't have enough financial education in schools and whatnot. So
we need to have a commitment to consumer economics. There needs to be an investment in consumer economics, and I would argue nutrition and physical fitness.
Look at you guys coming on here, reaching the people that we do. I think that we're able to help people.
Absolutely.
It's pretty cool. All right, guys, we gotta go back on. So
good stuff.
All right, cool. Thanks, guys.